Kevin Doverspike here, Remax Premier Realty. I'm here with one of my best friends in the industry, Mary Gwak with Lawyers Title, and we're going to talk a little bit about title insurance, what's it all about? And Mary.
Good morning.
Nice to see you.
Nice to see you too. Thank you so much for having me here today.
I appreciate that. And as I said, Mary's my go-to person for anything in title. And that's how you hold title, questions that we have, clouds on title. There's all kinds of things. So we're going to kind of go through this and what is title insurance? But first off, give us a little bit about yourself, Mary.
Sure. So I'm Mary Gwak with Lawyers Title Company. And I've been in the industry for about 16 years. I think that title insurance is probably one of the most important components in real estate.
I agree.
Isn't it though?
Absolutely.
But it's probably the most least talked about. And most of our consumers and even some of the real estate agents that I work with, a lot of times they really don't know what the function is to the end consumer, which would be your buyers and your sellers.
Correct.
So it's a subject that a lot of my peers and outside of the industry don't find to be exciting. Me personally, I think it's one of the best insurance policies that our nation has to offer.
I would agree.
So
this is a big investment.
It is.
Real estate.
Absolutely. It is one of the biggest investments. It's not something that title insurance, one of the very unique components about title insurance, I think, is it's a one-time premium. So it's not like your typical health insurance or your auto insurance where you have to renew every year. But when we kind of break down what it is as a product, I'm going to talk about it specifically from the policy perspective, but also what it means for your sellers and buyers here in California.
Right.
Title insurance has a different function. So the policy is a policy, but what the companies do for your clients and for you is it's a different function depending on how the state is set up. In California, Southern California in particular, title insurance companies work very closely with your escrow company. We're actually the movers of all money.
Right.
So when you're in a transaction and your buyer is obtaining a loan from US Bank is actually not sending the buyers $500,000 to an escrow company or to Remax or to XYZ. They're actually sending it to Lawyers Title Company.
Right.
Because we are taking the buyer's money, that large sum of money that they just borrowed, and we are taking that to pay off the seller's loan. So one of the primary functions prior to us even issuing the policy, if you will,
right,
is the fact that we are moving the big amounts of money and we're doing the payoff. And you know, one of the things, if I may just talk about my company for a second.
Absolutely, that's why we're here.
Yeah, thank you. It's not any sort of a, wishing ill will on anyone. But what I say is, in title insurance, we may not have frequent claims because we are insuring our work.
Right.
So once you call me and order a prelim with me, I have approximately 30 people in the back doing all the research because we're insuring a big dollar amount. When we get a claim, it's not for a broken nozzle. It's not for a fender bender. Most of our claims are hundreds of thousands of dollars. But you do want to make sure that you're working with a reputable title company. We have seen title companies. I was just helping a client the other day because they have a title issue and the title company is no longer around. Now, I'm not putting that as an alarmist out there because title insurance is all governed by the California Department of Insurance.
Correct.
But this consumer is now left with almost kind of like he's got a policy, but it's almost like an empty shell.
Right.
He's going to have to
There's
go
no
and
one behind him.
There's no one behind it.
There's
So
no one going to pay the claim except maybe that owner.
Right. And so his attorney is now going to that previous real estate agent.
Right.
Who was possibly
negligent,
and maybe not, but
I'm sure it wasn't the real estate agent, though. I'm certain that the title person probably was one of them. I can't imagine a realtor making a mistake. Mary Gwak, stop. I understand. I also am starting to see, to this point, what you're talking about. I'm starting to see advertisements on the television for title.
Yes.
And,
oh my
goodness. I just kind of open my eyes. It's like, most people don't even understand what title is.
That's your take too, right?
Right.
Because that's exactly what I thought.
It is my take. I deal with people, the buyers and sellers, and they don't know about what we're doing with title until the end. If there's an issue, if there's a cloud, if there's something not paid, they kind of give you, well, how do you know that?
Right.
Well, we investigated the title. That's our responsibility to make sure. My reasoning for using a qualified person in a company like Lawyers Title and yourself is so that we can head off at the pass before we even put the property on the market, some of the issues. And I know that in the past, I've actually sent over multiple trusts of people that are going to sell, the family members or parents or something that passed away, that I've given you so that you've been able to take a look at it. And some of them have been pretty scary when we first looked at them, but systematically you can correct these things.
That's right, if we have time.
Correct.
And you're so good about that. It's typically when we have a transaction that has a strenuous feel from start to finish, is because there wasn't enough research done beforehand.
Right.
But I think with your transactions, every single time you have a trust, you already have it in review by underwriting.
Correct, which is so important.
It is. And unfortunately, there's no ill will behind it, but most of our consumers don't realize that once their property is in a trust, there's a certain parameter that we need to work around, and it's not a free-for-all. Just because I'm the trustee and the beneficiary and the trustor, maybe everything about my trust says Mary Gwak, there's still certain things.
Right.
I'm still alive, but I can't give power of attorney to you, for
Right.
example. I mean, that's kind of a common thing that we see a lot. A lot of these folks have their property in a trust. They're getting up there in age. They don't feel good about signing all this paperwork, so they want to put a power of attorney and assign their eldest son. Well, unfortunately, most of our trusts, they don't allow for powers of attorney. So that's kind of an example.
Right.
We get that addressed on the front end.
Right.
When you bring that forward.
That's why it's so important, I think, that when we take the listings and we're going to put a property on the market, no one wants to have a problem in escrow. I tell my clients on an ongoing basis, it's easy to put it into escrow. It's difficult to get it closed because there's so many things that can happen. And just one of those things that can happen are what happens with title.
Yes.
There's other things with the lender. There's other things with the property itself that have nothing to do with the insurance policy is on title. It's not insuring the water heater.
Correct.
It's not insuring the water pipes.
Right.
Those are things that are taken care of by home warranty and other insurance. So we need to make sure that we're very aware of what's going on, and we don't want to have people that have problems. And that's why it's so best behind the scene to get it done.
That's right. And I think that, there's so much done behind the scenes. For your seller or your buyer, they're simply paying the premium.
Right.
But they're not in actuality seeing each step, each phone call you and I are making, each phone call you're making with your escrow officer. One of the rules of thumb that I give when I'm speaking or teaching a brand new set of agents is I say, typically, if you have a transaction that can't close, that ends up not closing, more likely than not, probability-wise, there was a title issue. There was some sort of a title issue. And then I follow it up by saying, but I can pretty much guarantee you those ones that did not close, if the agent had enough time and knew on the front end, they could have probably closed. I mean, because some of these issues are, you can't find your cousin Bob that moved to Idaho 14 years ago and you've lost touch and you need him to sign off.
And those are everyday title issues that are going to happen ongoing. But if we go back just, not too long ago, but actually it's a little bit longer than when you start thinking, 10, 12 years ago, when we were having all the short sales and the foreclosures, we not only had problems with title as to the regular things that occur, But there were so many institutions that had liens against properties that went out of business. And their
Yes.
files and
That's such a
stuff,
great point.
those files were in these warehouses that were being sold to the Bank of Americas and the Wells Fargos and the people that are still around
Yes.
today. But there were major issues that happened. There were many properties I had problems with title that we couldn't find the chain of title. We couldn't find that loan had been paid off. So title wasn't going to insure it.
Right.
Because they were on the hook for hundreds of thousands of dollars, and there were so many properties that were so far upside down.
Yes.
It was just crazy. So that's important that we think through that a little bit more. But it's nice to think about those days are behind us.
Yes. 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 I mean, I do not miss those days, and I know you don't either.
No.
But you brought up a very good point. If I were a consumer and I lived, in Irvine or wherever I lived and owned a property, knowing what I know now, if I ever get out of the title industry, which I probably won't, but
She's going to own the title business. They're going to. In fact, she's already put in an application to change it to Mary Gwak Title.
I like it.
So that
has a nice ring, doesn't it?
Absolutely.
Mary Gwak Title, Kevin Doverspike Real Estate. Yeah, I like it. But one of the things that I would do as a consumer, I would call my friendly real estate agent, Kevin Doverspike, whether it was every 2 years or every 3 years, and just say, hey, Kevin, would you mind seeing if your friends can run title? Because your point, and I like to kind of forget about it because those days were so tough, but when we talk about some of these loans being paid off and companies leaving, we're not going to have it as much because a lot of those small lenders have folded shop and have never been able to come back.
Right.
But even with some of our major lenders, do you know how often it is that we have a preliminary title report where we know based on what the seller's telling us that their property should be free and clear, but there's still an old loan on there? So let's say they made their last payment in 2004 or 2014. We don't know. As a consumer,
right.
I sent them that final check, and that check said final payment for 123 Apple Street.
But they never received anything back from the bank.
No, they never received anything back. There is actually an official document. It's called the Substitution of Trustee and Full Reconveyance. It is the reconveyance that actually extinguishes the loan. Now,
Through the title.
Yes, through the title.
Through the county.
Yes, through the county. So the banks are required, this is not to put banks down, they are required to do that once they've been paid in full.
Correct.
But we don't have any oversight on it. I've seen it myself with my own refinances. I mean,
Right.
I paid off Citibank and got a new loan with Bank of America, and I go back and look, and all of a sudden I have 2 loans on my property. It's like, well, wait a minute. How do I owe $800,000 on my $500,000 property? How did that happen?
Are we in 2007?
Oh, right. But
Am I that upside down?
But it happens because that first lender or the lender who got paid off never extinguished it.
Okay.
So with something like that, if you had your client calling you from 123 Apple Street, you could look that up for them.
Right.
Well, you would call me and I would look it up
Right.
for you.
And
But
that's basically what this TV ad is talking about. But they're talking
That's
about
right.
people coming in and stealing your properties. That's a little bit different story down the road. But when you start talking about title again, we talk about how you can hold title as joint tenants and so on. But how many people actually, and how many properties are there that are actually in trust versus personal?
personal,
And the reason why you have a trust and you do this is to make sure that when we're all said and done, if you pass away, that Uncle Sam doesn't get it.
right?
So that's the
Right.
biggest purpose.
Yes.
But what are the numbers that are trust versus not in trust?
So if we were to look generally speaking as a big picture in California,
Mhm.
I would say that probably about 25% of the properties are in trust.
So 75% are vulnerable to the regular tax codes because when it's in a trust, it's then guided what the government can do
That's right.
for you. So it's important that you think about that. So you may want to think about, do you have a trust?
Right.
Do you have a will? All these things that are going to make it easier for your family.
Right.
And so you're passing.
Right. I mean, you work so hard in your lifetime, and we all know. I mean, if any of you don't, let me know how you do it, but we all know we pay plenty in taxes. So to imagine that you've worked 50, 60 years to create this portfolio of real estate or investments for yourself,
Right.
and you want to pass it off to your son, Johnny, but the IRS has their big shovel in it right from the get-go.
Right.
And a trust to me, it's a no-brainer.
Right.
If you own real estate in California, if you have a child, and even if you don't have a family, having that trust is the only way you can have a say in what happens to your assets after you pass away.
Correct.
Without it, it goes to probate.
There's no roadmate.
No, exactly. And when you start
Kind of like the monopoly board, pass go. Well, you don't get to pass it to somebody else. You're passing it to the government.
Right. And it's so true. And because you work with enough trust attorneys and have seen enough trust, but I think a lot of times our general consumer, our homeowners, think of it as it being a much bigger deal to create a trust than it really is. That's what you have professionals for. That's why you go to a real estate agent.
Correct.
That's why you come to a title insurance company.
That's why you go to someone to take care of your eye for LASIK surgery. You don't go to a foot doctor.
Well, exactly.
You go to the right person.
Exactly. I mean, in Orange County, we've got some great ones, but I think the going rate right now for a decent family trust, it's not over $3,000-$4,000. So you're talking about a couple $1,000s, and you're going to spend, cumulatively maybe 5-6 hours between the few appointments, getting notaries done, and you're done.
Yep.
And the thousands of dollars you're going to save on the end, I think it's worth it.
I think you're right, Mary Gwak.
Yes.
I think you're right. I think this is probably a good time to end this, and thank you for coming
Absolutely.
by. I greatly appreciate your expertise in this part of the business that and you're part of my team.
Thank you.
That we think very highly of you, and I appreciate you coming by
Thank
today.
you so much.
Thank you. And I will, in the show notes, have some additional information how to get in touch with Mary if need be, or you can call Kevin Doverspike at 949-395-4250. Thank you.
Thanks for watching and listening. Don't forget to like and subscribe.